Welcome back, everybody, to Markonomics 101 presents Hoot Loot, where you come to be informed, be amused, and never once be misled. Or at least, not that I know of, not that I care to, not that I want to know. I want to thank everybody that's been liking and subscribing. That we've seen the numbers go way up, and the comments, and please keep sending them in, and all the fan mail, and of course, all you ladies out there know that if I was a woman, I'd be all over me. You guys ladies are just too much. But anyway, today's show is about bubbles. And the term bubble is not about bubble bath. It's not about that little thing that you go into and it blows little bubbles. It's not about that. It's not about champagne, unfortunately. I could sure use a glass of it right now. As a matter of fact, where's my damn champagne? It's about a financial bubble. A financial bubble occurs when things become so insane that they are inexplicably insane. I couldn't even pronounce it because I've had a little champagne bubbles, but inexplicably insane. Like, for example, the first bubble recorded in history was called the Dutch tulip, a mania bubble, where one tulip actually was worth, at its peak, a house. You could buy an entire house with one tulip. Here's a tulip. I'll take your home. And they would do that. And the thing about them is the bubbles can grow bigger and bigger and bigger and bigger, and you never ever know when they're gonna pop. You can take the slightest prick, and then all of a sudden, oh. Okay, well, I'm back. We have a giveaway, which I want to start out with talking about $200 to any subscriber who wins our random drawing at the end of February. It's the 13th. You have 15 more days to enter, and we are going to give away $200 real dollars to anyone that wins that contest, and I'm counting on it being me because I'm going to actually, maybe, put my thumb on the scale. Don't worry, I'll be checked for that. Anyway, let's start talking about the Dow Jones Industrials. They are not looking as good. And the reason I say this is a bubble, okay, and the reason I'm talking about bubbles here is things like negative interest rates in Europe, okay, that is insane. I don't know what the hell that means. I still don't get it. I'm going to try to figure it out, but I don't get it. The other things like Apple, we talked about it last time. Its market capping bigger, okay, bigger than the entire Russell 2000 index, number one, and number two, bigger than all but 7 countries' annual GDPs. And you add the top 6 companies in the U.S., and they pretty much exceed almost everything but the world's GDP. So you look at the comparisons and they're insane. Okay, they're just insane. When DoorDash gets sold for $90 billion because it shuttles chicken chow mein from Lincoln to Santa Monica. Oh my God, that's really a valuable company. Well, anyway, I do digress. Let's talk about the insane markets, and I'll try to stay sane while I do it. It's really tough. John Maynard Keynes had this great saying: "The market can stay basically irrational longer than you can stay solvent." And trust me, you get pushed to the very limit when stuff like this happens. So anyway, we'll start with the Dow. It's in a very narrow flag formation. We talked about that being a sign that energy is leaving the market. It is. It's actually leaving it. And notice it's kind of curling over and it's having small days. All of a sudden, all that volatility is gone. And what that does is it makes people more complacent. They don't realize how risky it is. All of them are on the same ship. There's nobody to sell to, and yet they don't think it's risky because it's not moving anywhere. It's not moving because there's no new buyers. Hello. So anyway, let's go on to the second chart. This is kind of blown up, but it shows that when there's an up move like this, that's very narrow and has very little volatility on the upside. Plus 0.2, plus 0.3, that kind of thing. Okay, then you have a down 5% day, which you have, and then you've wiped out the last 2 months of gains. And then you have 2 days in a row like that, which is very common, and you've wiped out the last 6 months of gains. So it's really risky to buy into one of those formations. And the reason I warn against it, you are not buying low and selling high here in most cases, but we're going to show you some interesting stuff at the very end. The real estate sector is breaking out. Thank God. I was getting sick of being negative on the market all the time. And here we go. So this is Standard & Poor's 500. Looks just like the Dow with a little curly Q, running out of energy too. And again, if you look at this narrow trading range, this thing, honestly, you could lose like 5-6% and it'd be all over. You'd have all those people that bought it would be underwater in a flash. This is the small cap index. It broke out of the island, but here's the interesting thing. It didn't really break out of the island. It just kind of eased out of the island. In other words, this too is showing less strength, less oomph, less conviction that something is to be happy about. And I wonder why. Nobody's working, everybody's staying at home, and there's money for getting floated around. Gee, what a thing to get bearish about. Anyway, this is the Dow Jones Transportation, and I've talked about this. This is the index that used to be called the rails, and it moves all the goods, and it is about as good of an economic indicator as there is. And this is about it as bad of a pattern as you can get. And I showed last time on last Wednesday's show, which was pretty interesting. I don't have it in this show, but American Airlines has lost $100 billion in a month, and they're basically trading at 37, and they're asking for another $100 billion because it's going to cost them just to stay in operations that much the next month. And it's worth $37 billion. Please explain that to me, somebody. If somebody could write in and explain that to me, I might understand certain things that I don't currently understand. Anyway, this one is not looking good. And for a lot of reasons. I mean, I think a lot of the stimulus has already been spent, and or the market has anticipated that it will be, and it's not that much, and it's being cut back, and all this other kind of stuff. Throwing money around throws money around, doesn't produce a single good, and that's what you need to have a healthy economy. Goods being made by people instead of them staying home and listening to wonderful people like me and liking and subscribing to our channel, which you should be doing, or else I don't know, something. So this is the yields on the 10-year treasuries. Okay, now this one is important, really important, because what you're seeing here is this is starting to really move. And this thing was at like 0.5% a few months ago. It's now at about 1.2. Okay, now think about the market going from 5% interest rate to 12% interest rate. Imagine the impact on the economy if that happened. That is what is happening here, because geometrically, arithmetically, mathematically, it's the same exact thing. So we are seeing a huge jump in the discount rate of all assets, and the market is just going, okay, so what? But I'm telling you something, it's going to keep going like this. Look at this, it's accelerating. Okay, this one really has got to have them bugged. This is the 30-year treasury. I wrote as the Fed lost control. Well, the answer is obviously I must have thought so, or I wouldn't have written it. But I think they have. Here's what I think goes on in a Fed meeting. They basically talk to each other. It's sort of like, oh my God, what do we do next? We've been buying all these 30-year treasuries and they keep going up. Oh, what are we going to do? Oh, I could just see that. I think they've actually might have lost control. And if they try to keep rates even lower, that's like holding a beach ball underwater. It takes so much more, and the consequences are so bad. This is a Grayscale Bitcoin Trust. It's not actually the price of Bitcoin, it holds Bitcoin. The Winklevoss brothers did pretty damn well on this thing. It's almost like an ETF, so you don't get hacked, and that's the advantage of it. But one of the things about this is that this is also a sign. I think this thing has double top, possibly double top. And so all that speculative fever about Bitcoin that you're hearing, oh, what do? I day trade Bitcoin all day long. I make thousands of dollars every single day. How do you do that? I don't know. I just, what does Bitcoin do? What is it all about? How do you value it? I have no idea. And you have no idea how many conversations I've heard like that lately. So here's a sign to me that after a parabola and all these people buying it just for the hell of it, that we're at a stage where the dumbest of the dumb, the people that gave their house away in exchange for a tulip bulb, okay? Somebody took a tulip bulb in exchange for a house. Okay, that is about the kind of dumb money that I think we're seeing. The very last of the dumbest of the dumb money who don't have any idea of what they're actually buying or why. And, I've been there. And I can tell you this, I don't want to see anyone else go there. Because I've made every damn mistake there is in the book. I'm not trying to scold anybody or anything. I've done them. Here's Apple. Now, I mentioned earlier that Apple is worth more than its market capitalization of $2.4 trillion. I'm sorry, trillion. See, I only have a billion in my bank account, so I'm not used to saying trillion. But Apple is worth more than all but 7 economies' GDP. Apple is worth more than all but 7 economies' entire GDP. All right, need I say anything else? All right, Amazon actually is very constructive right here. It actually looks pretty good. I would say that despite the fact that Jeff Bezos just retired, now I would have thought that was something that would have shaken it up a bit. It has not. It's done very well. Very constructive chart. On Facebook, I wanted to make sure that all of you had full disclosure, because if there's one thing I can't stand is someone having an agenda. So I have no agenda here whatsoever. There's no conflicts of interest. So we've done our own fact check. Okay, or Ace has. He has. He's been fact checking like 24/7, except when he sleeps and you can hear him right there. That's total enthusiasm about fact checking. And he's found that Facebook has no fact checkers and no customer service. I guess that one of the requirements of Facebook to work there at all is that you have to not have ever used a telephone. Because if you know how to use a telephone, they assume you're going to use it, and they absolutely don't want that. They don't want any kind of communication. So we've done a little fact checking, and Ace is pretty good at that, and not too good. So Google, this chart is like a picture perfect great chart. There's nothing I can say bad about it. There's plenty of bad things I could say, but this thing is like picture perfect. The problem here is, if you buy something like this and you buy it on a signal, you basically have to count on it going to an even more extreme level of valuation. And so the chart looks really good, but what's going to drive it yet higher than where it already is? It's already pretty high as it is. And same with Microsoft. I mean, Microsoft is just, this chart is just excellent. And on the other hand, what is going to propel it higher? It already owns half the planet. So I just don't get it. Qualcomm is interesting because it was like one of the big leaders and one of the interesting companies of the NASDAQ, and it's actually broken down. And that's interesting because they are not only a large chip maker, and you can't just eat just one. I can tell you that right now. Like these chips right here, can't have just one of those. But they make chips for 5G, which does not give you brain cancer, by the way. I do not have any brain cancer at all. And I want you to look at this thing has broken trend, and that is one of the first signs that the ice is cracking. And there are a couple others. Now this one too. My good friend Elon was supposed to be here today. Of course he's not. He's too busy tending to his SpaceX thing back there. I'm going to talk about that in a minute. But Tesla is one of those companies that is impossible to understand. Everybody has an opinion on it. Everybody says it's great, or it's terrible, or it's this, or it's that. What I'm going to tell you is, it is too complicated to form an opinion on. All you can do is look at these charts, and it doesn't look good, and I would avoid it anyway, because the thing is, the valuation of Tesla would put it as the 15th largest country. Okay, all right, these are money center banks. These are, this is basically the banking sector, all of the places you get checks. I mean, a money center bank, you get checks. A broker-dealer is a place that serves, that it gives you investments in exchange for raising capital. Just so that you know the difference between the two. They're both very important parts of the financial industry. So the money center banks actually look up like they're forming a rounded top. That's my guess. That's what I think. I actually do believe that this is part of the reason we're seeing less energy in the bigger indexes is the banks are slowing down. There's all this talk on certain stations, I don't know, about how interest rates are so good for them, higher rates. Yeah, they do borrow short or low and lend high. But, when you hold all these assets already, that rate going up is devaluing everything you hold. Every new piece of business may be worth more, but by comparison to how much you're losing in terms of your value, it's like a pea versus an elephant. You are losing so much in value as interest rates go up that it doesn't matter that you get a little bigger spread on whatever you're lending. It just doesn't matter. These guys don't look good, but we'll see. They might break out again, and who knows. This is a broker-dealer index. These look great. I mean, look at this. That is like a picture-perfect chart of a parabola. And it's not, when I get mad or when I sort of piss all over parabolas, it's when they're really steep, they're going straight up. This is going up gradually, which means there's like, the interest is building, but not at a fever pitch. And that's a killer. It's when people start, they get FOMO, fear of missing out. And they want to make sure that they're part of this great trend. And by the end of this great trend, this great trend is over because they're the dumbest people there are. But these guys are doing pretty good. Biotechnology index, this one's obviously going to do well because every day I hear about a new shot. And I still ask the same question every time, and I have yet to hear the answer. How do you know what is the right shot to get? And two, vaccine-wise. And two, who is liable if you take the wrong one and you die from it? Who's liable? Is the doctor liable? Is the pharmacy liable? Or you just made a dumb, stupid decision? I still have yet to hear that. And I'd like to understand that. Is there something like, there are over 10, more than 10 in the US right now. Every country has them. They're all banning them from each other. It's really weird. They're all different. How can you have different vaccines? I'm not a microbiologist, but I've never heard of such a thing. So I just keep asking and no answers, except Ace, and I don't get them. All right. This is American Express. Again, looks like, this one may just be breaking out. I don't know. It looks like a rounded top. We're really right on the edge with a lot of these companies. Berkshire Hathaway, too. This thing could still go up a little bit more. I've actually redrawn this graph a little bit. This holds all the banks, and that one looks okay. This looks terrible. This is a retail company, Costco. There's a few of them. I haven't really redrawn it, to make it a wider, dome top. But this is, that's not going anyplace. That's shopping and that's retail, and that is 70% of the U.S. gross domestic product. 70%. 70%. So you have to look at retail as something that is indicative, and transportation is very indicative as well. So this is Ford Motor. The reason I put these in is because they're in parabolic moves, they've all of a sudden become so sexy, and like, oh wow, we're all going to go electric. Like, everybody's going to want an electric car. FedEx, this one really looks bad. And FedEx is a very, very important company. They handle a large percentage of goods. And when companies like FedEx break down, it tends to kind of cast a pallor. General Electric, too. Another company that is both a finance company and an industrial company. And this company just absolutely looks like crap. So, that's another thing to just kind of, have the caution flag. MasterCard, you want to look at credit card companies because they are indicative of retail sales and things like that. This one has been a sideways pattern for a long time. It kind of did look like it was going to break down, but right now it's sort of in a sideways pattern. I would say that at this point, there's more tipping down than up, but it's still not that solid yet. So you have to still watch. Nordstrom's forming around the top, another bearish side. So, that's another one that just says negative. But then I got Target. Target looks great. So that's one on the plus column. UPS, I'm going to put that in the minus column right there because they handle so many goods and they're making a rounded top. And we'll see if they break out positively. Well, we'll see. We're still open to it. We're not fighting the market. We just want to know where it wants to go. And this tells me, this tips on the negative side. All right, we got Visa. This is also kind of tipping slightly negative. The other major credit card company is Visa, of course. And, we're keeping an eye on it. But, they're all just not looking good. And here's one. Attention, Walmart shoppers. This doesn't look good at all. Look at that. It's in a firm downtrend. If you look at it in red, the red column, it's in a firm downtrend. It does not look good. And so, not enough Walmart shoppers is a bad thing for the economy in general. Okay, we're going to go on to some of the funner stuff here, the stuff that gets us really high. This is Afria that's merging with Tilray. I said last week that these are ones you needed to sell, like immediately. That they are prone to quick snapbacks, and look what happened to this one right here. This one went from 32 to 15 overnight. Tilray went from 70 to like 39 overnight. Aurora Cannabis, it went way down overnight. And I'm just showing you some of these. Canopy, look at that. It just got blasted in 2 days. And the thing is, You know, you have to take profits when they're there and be grateful and be thankful. When I get to read, I always get my butt kicked. And these guys, these are prone to snapbacks. You have to say, thank you, God, just take the profit and run. And I wanted to show you that for a while, these are very likely at this point to just kind of flounder around. So wait until there's another good setup. Okay, there will be, but it's not right now. Okay, and this can't be 5 year. What I'm showing you, some of the drawdowns here, those are the ovals in red. And you know, you're going to have to suffer through those occasionally, but you want to get the best setup. It is not now. Okay, silver has been acting terribly, but yet it continues to act well. I don't know what I'm saying. What exactly? It's a contradiction. But it continues above a trend line. It continues to not go up when the Reddit rebels tried to drive it up. It didn't go anywhere. But now all of a sudden it's starting to creep up a little bit. And I think silver may be very close to a good setup point. And we're going to keep watching it. We're going to show you some of the companies. This right here is the double ETF. This one looks really good too. And unfortunately, if you were one of the rebels, you were buying where that oval, that red oval is, and you know, basically you allowed people to take money from you. That's what you did. You handed people money. And I only wish I was there to get it. But silver went back down, but it's now in a nice pattern. It's a market. It's big. No one can really handle a market that big. I mean, the Hunt brothers tried, and they were big, and they didn't do it. So you know, keep that in mind. Core mining, now it's a really hard chart, but it's acting constructively. And so I look at Eldorado Gold, it's acting constructively. I look at then Paramount Gold and Silver, and what I wanted to show you is how much money you guys gave away right there in that red oval. Everybody that sold to you at $1.50 to $1.60 is thanking their lucky stars. And what do you have? You have a big loss of 40 cents. Now, it probably will go above there if you're long run holder, but you didn't accomplish anything by giving away 40 cents a share. Wheat and precious metals. This one causes me heartburn because I'm a long-term bull on gold, and I look at this and I go, oh my God, this thing looks terrible. It's a head and shoulders pattern. It's a rounded tops pattern. Doesn't look good at all. So I put that one in the negative column. Yo mama! Gold. Negative column. Look at that. Doesn't look good. It's going anywhere. So what I'm trying to say is that right now there's some that look good, some that don't. It's not the right time to enter the market. You know, now's the time to get liquid and take that liquidity and get ready for the next opportunity, which is coming up, but it's not now. But I do want to talk about our real estate. I mentioned it last time. This is Dow Jones REIT index. These are basically mall owners and public storage and large property management companies. Well, guess what? They're making a comeback. And not only making a comeback, they're emerging as new buys, and they're not expensive. Relatively speaking, they are relatively inexpensive. So you can't look at these as, gee, I'm paying some sucker to buy this from me at a higher price. These companies have merit on their own. So here's the real estate sector spider. I want to just show you that, just a comparison. And this is one of them right there, Brookfield Asset Management. They're just about to break out. They have a rounded bottom that you see there. This thing actually could go. Now, this is the kind of company now that people are suddenly, all of a sudden, the malls are having great capacity, and Boston properties, they're coming back. And because they're coming back, there are opportunities. So I wanted to show you some of these. We're going to give you some more stats on them. This is Equity Residential Property, another large property management company, and it is just about to break out. Just about. Probably will on Monday. The point is, enough of these companies are starting to go in the right direction together to where this sector looks like it is going to go up, and it's a great inflation hedge because these are hard dollars. I mean, while it's a security, it's backed by real estate, which they own. And that's really good. That way you're not invested in the dollar. We know the dollar is going eventually. So, and public storage. What a great place. They have the best idea. They're renting out to millennials now. If you're a millennial and you want to smoke weed, and they have it, they'll decorate it like a basement for you and everything. So public storage is coming back. That's a rumor, by the way, that I just read a little while ago about the basement thing. So not quite sure. But in any event, great company. They earn consistent income. It goes up. And again, this is the last, actually the last company, but I wanted to point that one out. That is one. Those are four of the best companies that we've seen, and they're all looking good. So I want to thank you once again for tuning in. If you have any questions, by all means, email us and like and subscribe, please, if you liked it. And welcome back, and we'll see you at the next show.